Hey everybody, it's Adam and Jen back with another market update. Adam, looking at the numbers this morning, it's hard to stay positive. It's not good from the Bureau of Labor Statistics.
No, these are really, really unsettling numbers. Frankly, Jen, it's just sad. I mean, these are, as Casey Crawford, the CEO of our company, has mentioned, it's not about the numbers, it's about the names behind those numbers. And so we're looking at 20.5 million Americans in April jobless. And that's 14.7% unemployment rate. That's the worst we've seen since World War II. It is a really tough time right now if you are in industries, especially that have been affected by this pandemic. And that's a lot of families, that's a lot of names that are suffering right now. And then strangely, the market is reacting to this as maybe a good sign. Jen,
right. Check this out, guys. This morning, as of Friday morning, the Dow was actually up. Dow futures were up 200 points, and the 10-year Treasury note yield was also trending upwards. So why is that, right? Like, how is that possible that those two would go together? The thing is, the market doesn't think day up most of the time, guys. Unless there's a really drastic change, the market is thinking in advance. They're thinking in the future. So right now, investors see these numbers as not as bad as economists had predicted. Economists had predicted 16% unemployment. So they're like, okay, this is not nearly as bad. They're thinking we're past the worst of it. And we're seeing that with the initial unemployment claims coming down in numbers. They're still bad, don't get me wrong, but they're coming down each week. So we're not seeing these record numbers anymore. So perhaps economists think we're past the worst of it. And so that's a good sign. That's a good sign that they're thinking ahead. So again, with that, we're also seeing, Adam, mortgage rates that are still staying historically low. How does that work?
Yeah, it's this amazing thing that happens in the economy, and the way our federal government responds to economic crises is that investors flock to safety. When there's uncertainty and bad economic news like we've seen so much of lately, investors move their money into the safest places, which is U.S. Treasury bonds. And then on top of that, the government is doing everything it can to support the housing market, because the federal government realizes that by lowering the cost of credit for people who own homes, it serves as stimulus for the entire economy. And so if you are employed, if you do have a stable job situation right now, it's a great time to look at refinancing your home if you want to stay put at a lower rate, or moving to that next home, whether you're sizing up with a family or sizing down if you're looking for something smaller. Now is actually a really good time. And Jen, you mentioned it a minute ago, realtors have figured out ways to work around some of the challenges the pandemic has created and do virtual showings. And so the industry has adapted, and it actually is a good time if you are stable and have employment to look at your situation.
Absolutely, and purchases are on the rise. The Mortgage Bankers Association data that's within this market update blog can show you that right now, refis are still strong. You can refinance, and it would be a great opportunity for you to look at if it was good for your situation. But also purchases are up because people are figuring out, we can still look at this house and still stay safe and socially distant at the same time. So make sure you call Movement.
Confession, I drove by a house and looked at it yesterday because it just looked like such a great deal.
Okay, there you go. All right, guys, make sure you call a Movement Mortgage Loan Officer to explain your situation to them, see if they might be able to either save you some money with the refi or get you into that house you've been looking at, because rates are historically low right now. And read up on the details right now at movement.com in the market update.